Technical analysis has a reputation problem. On one end, you have traders who treat every candlestick like a prophecy. On the other, you have fundamental investors who dismiss charts entirely as noise. The truth sits in the middle, and it is more useful than either camp admits. Price action tells you what every participant in the market is doing, not just what analysts think should happen. Support levels, trend structure, and candlestick patterns are not magic. They are aggregated human behavior, and aggregated human behavior has patterns. The problem has always been that reading charts takes years of practice. AI compresses that curve dramatically. Let me show you how. Before we get into the prompts, let us be clear about what AI is actually doing here. Modern AI, including the free version of ChatGPT, can accept either an image of a chart or a table of price data. Both work. Which one you use depends on what you have access to. If you are working with a chart image from a platform like TradingView, Yahoo Finance, or your broker, you can take a screenshot and upload it directly. The AI will analyze the visual structure. If you have raw price data, open, high, low, close, volume, you can paste it as a table and ask AI to calculate the levels and patterns mathematically. Neither approach requires you to be a technician. That is the entire point. You are using AI as the interpreter. Your job is to ask the right questions. Prompt 1 is about identifying the map before you make any trading decisions. Pull up a chart for the stock you want to analyze. 6 months to 1 year of daily price data works well. Take a screenshot or export the OHLCV data into a table. Then use this prompt. Analyze this chart and identify the key support and resistance levels. For each level, tell me the approximate price, how many times price has tested that level, whether the level held or was broken, and whether it previously acted as support and is now acting as resistance or vice versa. Rank the levels by significance, major levels that have held across multiple months versus minor levels that have only been tested once or twice. Support and resistance are the foundation of everything else in technical analysis. You cannot identify a breakout without knowing where the resistance is. You cannot assess a pullback without knowing where support should hold. Get the map right first. When AI returns the key levels, you're looking for 3 things. Confluence. A price level that has been tested multiple times across different time frames is more significant than one that appeared once. If a level has acted as both support and resistance at different points in the past, that is a major level. Those are the ones that matter. The flip. When a support level is broken and price later returns to it from below, that old support becomes new resistance. The opposite is also true. AI is good at flagging these flips, which are often where the best trade setups develop. Proximity to current price. A level from 3 years ago at a price 40% away from where the stock trades today is not actionable. Focus on the levels that are close enough to actually influence the next move, typically within 10 to 15% of current price. Write down the 3 to 5 most significant levels. You will use them in the next 2 prompts. Pattern recognition has to be used carefully. Here is what to look for. Trend alignment. A bullish pattern in a downtrend is far less reliable than the same pattern in an uptrend. Before you act on any pattern AI identifies, check whether it aligns. With a dominant trend direction, AI will tell you the pattern. You need to assess whether the broader context supports it. Completion versus formation. A pattern that is still forming is a hypothesis. A pattern that has just completed and the stock has not yet moved is a potential setup. The best opportunities are completed patterns, where the stock has not yet moved to the implied target. Measured moves. Most classical chart patterns carry an implied price target. A cup and handle measures the depth of the cup and projects it from the breakout point. AI will calculate this for you. That target becomes your initial reward reference when you size the trade. The trend and the patterns tell you the direction and the potential magnitude. The next prompt gives you the timing. Prompt 3 synthesizes everything into an actionable trade structure. Provide AI with the key levels from prompt 1 and the pattern from prompt 2. Then use this. Given these key levels and the pattern identified, define a trade setup. Specify the entry trigger, the stop loss level where the trade thesis is clearly wrong, and the position should be exited. The initial price target based on the pattern's measured move or the next major resistance level, and the reward to risk ratio of this setup. Also, identify any conditions or events that would invalidate the setup before entry is triggered. This prompt turns everything you have gathered into a concrete decision framework. Entry, stop, target, reward to risk, invalidation conditions. Those 5 components are what a professional trade setup looks like. AI builds it from the raw material you have already developed. A trade setup is only as good as its reward to risk ratio. Here is how to evaluate what AI gives you. The minimum. Most professionals will not take a trade with a reward to risk ratio below 2-to-1. If your target is 5% and your stop is 4% away, you are taking a bad bet, even if the probability of success is decent. AI will calculate the ratio for you. If it comes back below 2-to-1, the setup is not worth taking. Stop placement logic. A stop loss should be placed at the level where, if price reaches it, the trade thesis is demonstrably wrong, not at an arbitrary percentage below your entry. If AI places the stop below a major support level, the level that needs to hold for the bullish thesis to remain valid, that is good logic. If the stop is just a tight percentage stop with no technical basis, push back and ask it to anchor the stop to a specific level. Invalidation. Some setups have conditions that void them before entry. A pattern that requires price to hold above a specific level is invalid if that level breaks before the entry triggers. AI will identify these conditions. They are as valuable as the trade itself because they tell you when to walk away before you are even in the trade. The bonus move is the one that separates amateur chart reading from professional chart reading. Every chart pattern and every setup exists within a larger context. A breakout on the daily chart that is running into massive resistance on the weekly chart is a much harder trade than a breakout on the daily where the weekly shows clear sky above. Before you execute any setup, run this. I am looking at a daily chart setup showing the pattern and direction. Now analyze the weekly chart for the same stock and tell me, what is the trend structure on the weekly time frame? Are there any significant resistance or support levels on the weekly that would be encountered before the daily pattern's target is reached? And does the weekly chart confirm or contradict the bullish or bearish thesis from the daily? If the weekly chart confirms the daily setup, same trend direction, no major obstacles before the target, your confidence should increase meaningfully. If the weekly contradicts the daily, a downtrend on the weekly with a bullish pattern forming on the daily, the setup is fighting the larger trend and the probability of success drops. Multi-time frame analysis is one of the most consistently useful edges in technical trading. AI makes it fast. 4 prompts, 1 stock, a complete technical picture built in minutes instead of hours. Prompt 1, key levels. Map every significant support and resistance level before you make any other decision. Prompt 2, trend and pattern. Identify the dominant trend structure and any actionable patterns that are forming or have just completed. Prompt 3, trade setup. Convert the analysis into a concrete entry. Stop and target with a quantified reward to risk ratio. Bonus, multi-timeframe check. Confirm that the weekly chart is telling the same story before you commit. Technical analysis is not about predicting the future. It is about identifying setups where the potential reward justifies the defined risk, and doing so systematically enough that the wins outpace the losses over time. AI makes that process faster, more rigorous, and available to anyone who knows how to ask the right questions. Next episode, we go deeper on technical analysis, indicators, how to use AI to interpret RSI, MACD, and volume signals, and stop treating them like buy and sell buttons. See you Monday.